For years, the US blocked its most advanced AI chips from China, building a great wall of chips to slow China's tech rise. But in early 2026, that wall is showing a crack. China may soon approve limited imports of Nvidia's H200 AI chip. This isn't a return to business as usual, it's a tightly controlled strategic compromise. The US is allowing exports of a slightly older chip, balancing Nvidia's commercial interests with national security. For Nvidia, it's a chance to regain a sliver of a lost market. For Chinese tech giants, it's a lifeline in the global AI race. The move signals that total tech decoupling is more painful and less practical than policymakers imagined. Every step is choreographed, with strict conditions and limitations. The story of US-China tech rivalry is entering a new, more complex chapter. China isn't just another customer for Nvidia, it was once a cornerstone, accounting for a quarter of its data center revenue. Chinese tech companies built their AI futures on Nvidia's GPUs, and losing access was a major blow. China's vast digital ecosystem generates immense data, fueling AI innovation, but without top-tier chips, that fuel can't be fully used. US export bans created a vacuum, and while Chinese chipmakers like Huawei are catching up, Nvidia's performance remains unmatched. In AI, speed is everything. The ability to train models quickly can make or break a company. China is both a massive commercial opportunity and a crucible of innovation. Denying access slows Chinese progress, but also removes a key global competitor, risking a less dynamic AI landscape. The partial reopening is a tacit admission. China is too big and too integrated to ignore. Nvidia's return to China is no free-for-all. It's a golden ticket with strict terms. Only the H200 chip is allowed, and only for select private sector buyers. Sales to the Chinese military, sensitive agencies, and most state-owned enterprises are strictly banned. Every sale is a compliance exercise. Nvidia must vet customers to avoid backdoor transfers. The focus is on commercial applications, cloud computing, consumer internet, not state surveillance or military use. Nvidia now requires full payment upfront, shifting financial risk to Chinese buyers. This policy creates two tiers. Private firms get a shot at AI parity, while state-backed projects remain restricted. Trust is low, caution is high, and every transaction is scrutinized. It's business, but not as usual. The H200 is powerful, but it's no longer Nvidia's top chip. The real cutting edge, Blackwell, and the upcoming Rubin platforms, remains off-limits to China. The US is maintaining a 1-to-2 generation lead, letting China compete commercially, but keeping the best tech at home. For Chinese firms, the H200 is a huge upgrade over domestic alternatives, but it's a reminder of their dependence. This compromise manages competition without escalating tensions. Chinese companies get high-performance tools, but know they're still a step behind. The gap fuels Beijing's drive for self-sufficiency. The race continues, but the playing field is carefully managed. The moment policy rumors surfaced, China's tech giants lined up for Nvidia's H200. For Alibaba, ByteDance, Tencent, and Baidu, these chips are essential to stay in the global AI race. Alibaba needs them for cloud services, ByteDance for recommendation algorithms, and generative AI. Reports suggest each may seek over 200,000 units. These are massive, not experimental orders. The demand is enormous because there's no true substitute. Even older Nvidia chips outperform domestic alternatives. Nvidia's CUDA software ecosystem gives it another edge, making development faster and easier. For Chinese firms, buying Nvidia means buying into a mature, high-performance ecosystem. It's not just about hardware, it's about staying relevant in global AI. Initial shipments are modest, 5,000 to 10,000 modules, or up to 80,000 H200 GPUs. These sales aren't yet in Nvidia's forecasts, so they're potential upside if approved. A new twist: the US now imposes a 25% surcharge on these exports, funneling revenue to the Treasury and raising costs for Chinese buyers. The surcharge and high chip prices mean Chinese firms pay a steep premium, but the alternative is falling further behind. Nvidia's upfront payment policy protects it from sudden policy shifts or sanctions. Even these limited shipments are a major development, re-establishing Nvidia's foothold in China. For Chinese firms, it's enough to jumpstart major projects and upgrade data centers. It's not a full solution, but it's a critical restart. The deal is cautious, calculated, and high stakes for both sides. Despite the news, Nvidia's stock barely budged. Wall Street's reaction was calm. Investors see this as confirmation of Nvidia's indispensability, not a game changer. The deal's limitations: restricted volumes, lower margins due to the surcharge, and ongoing geopolitical risk temper enthusiasm. The market knows this isn't a return to the old China boom. It's a cautious, incremental positive. Investors are wary of policy reversals and waiting for real purchase orders before celebrating. The muted response reflects maturity. This is a step forward, not a windfall. Nvidia's global growth remains strong, with or without China. The road ahead is long and unpredictable, but the signal is clear. Nvidia remains central to global AI. China's limited access to Nvidia chips isn't surrender, it's a stopgap. The deal's restrictions and surcharges are a constant reminder of China's tech vulnerability. Beijing is pouring billions into its domestic semiconductor industry, aiming for a self-sufficient supply chain. Huawei leads the charge, with its Ascend AI chips improving each generation, though still trailing Nvidia. Chinese firms are optimizing software for domestic hardware, learning from Nvidia's tech as a benchmark. The dual-track approach: buy the best foreign chips available, while racing to develop homegrown alternatives. The H200s keep Chinese firms competitive now, while fueling R&D for the future. The ultimate goal: surpass foreign rivals and end dependence. Nvidia's partial return to China reveals a deeper truth. The US and China remain deeply intertwined despite rivalry. Total decoupling is more political rhetoric than practical reality. Economic interdependence is hard to unwind. Nvidia's health depends on access to China, while Chinese firms need American tech to compete globally. This mutual dependence forces both sides to find ways to coexist, even amid strategic competition. The US is shifting from blanket bans to a small yard, high fence approach, protecting the most sensitive tech, but allowing some commercial flow. The H200 is outside the fence. The cutting edge stays locked away. The story is a microcosm of 21st century geopolitics: fierce competition, cautious cooperation, and no easy answers. For now, the US and China's tech destinies remain tightly linked.